welcome to another episode of the Investor Financing Podcast. And today we have a special guest, and we're going to be talking about self-directed vehicles. And this is really exciting. We have Justin Palmore.
That flip profit of $58K, okay, with the SDIRA, the UBIT tax of that around 35% is $20,000. I mean, think about flipping a house. If any of you have ever flipped a house, that's a lot of work that was done. And to just have $20,000 wiped out is just unnecessary and detrimental, and that's not financial freedom. If you converted that asset within that, before that thing sold, then you would get that $58,000 tax-free.
Welcome to the Investor Financing Podcast, where we interview real estate investors and lenders so you can learn all the secrets to getting your projects funded and scale your portfolio. And now, your host, Beau Eckstein.
Hello and welcome to another episode of the Investor Financing Podcast. And I'm your host, Beau Eckstein. And today we have a special guest, and we're going to be talking about self-directed vehicles. And this is really exciting. And I'm actually really excited because this is something I want to learn about in detail, because I know it'll help me in my real estate investing business. It'll help me pay less taxes and tons of advantages. We have Justin Palmore from Eqrp here today, and I'm going to let him introduce himself, and we're going to go into a presentation on the product and the advantages of the product. It's the Ferrari of retirement accounts. So I'm excited to dig into this, and thank you for joining us.
Hey everyone, my name is Justin Palmore. Like Beau said, thank you so much for having me on. I am one of the national directors here at the Eqrp company, and we are founded on the principle of providing financial freedom for people. So I'm excited to talk to you today about the Eqrp, like you said, the Ferrari of financial vehicles, or for investment vehicles, and we're ready to go. So with that being said, let's go ahead and move forward. So this is my why. So I've got 3 kids and my beautiful wife. That picture of my wife was actually taken at one of my coworkers' wedding, and my 3 kids sitting there looking out of the ocean. The world's in front of them. I'm sure a lot of you out there can resonate with what world will they come upon when they start realizing the world around them. And times are tough now, but the world's in front of them. And the reason why I do what I do on a daily basis is to provide them with opportunities of financial freedom in the future. And so that they don't have to worry about finances, because I think there's going to be enough worries in the world where they shouldn't have to worry about that. And so they are why I do what I do. That's Bentley on the left, Witten in the middle, and Will on the right, 7, 3, and 1. And they are my world. And so that is my why. Our why as a company is very simple. It is breaking the financial bondage of 1 million people. What do I mean when I say breaking financial bondage? A lot of you out there have retirement money or investment money tied up in Wall Street, tied up with your investment advisor, your financial advisor. They're probably playing golf while you're working overtime. And so I just want you to know that a lot of your money is just tied up in these financial shackles to where it goes through the machine and the roller coaster of Wall Street, where you could be making so much more if you're just given freedom from those financial shackles. So it is our mission as a company here at the Eqrp company. Our mission, Damian Lupo, our founder, it's his mission to provide financial freedom to 1 million people. And that is what we live and die for here. And we wake up every morning striving to do. So when you were a kid, you were probably scared of this guy. This is the boogeyman. Okay. And you're probably scared of the dark. You were, somebody was going to come in your window or under your bed or come through your door and just steal everything you had. The boogeyman was who we were scared of as a kid. As we get older, and for investors and we're business people, this is the boogeyman. Okay. A lot of people were scared of the IRS. A lot of people, I just got off the phone with somebody who was just asking me, all these questions about, what if the IRS thinks this? What if the IRS thinks that? People were so scared of the IRS, because the IRS is in the investment world, the boogeyman. Like they constantly, we think that they constantly and the government want to, kind of get part of our investments. So 70%. So thinking back to our boogeyman, the IRS, 70% of what we make in our lifetime goes to the government in taxes. 70% of everything that you make is going to go to the government. And so that's the boogeyman. The boogeyman is coming to take 70% of everything you have. If you think about that number, that is crushing. That is absolutely crushing. Think about, all the hours you put in, all the overtime. That 70% you'll never see in its current status. So what about 0%? Okay, let's think that way. In order to get to 0%, you have to think different. And in order to think different, you have to invest different. Okay. So now I'm going to talk to you about the EQRP. The EQRP stands for Enhanced Qualified Retirement Plan. This is our trademark name. It's the Nike brand of retirement funds. So we definitely, like we said earlier, we definitely pride ourselves on being a very robust, great vehicle. It's the Ferrari of 401ks. A lot of times people try to compare us to other types of 401ks, where other types of 401ks are really Pintos when it comes to the Ferrari of 401ks. And I'll show you why. I'm not just saying that, and I'm not going to disparage anybody else, because other people do great stuff. But if you want the ultimate vehicle that will give you asset protection, that will give you all of the avenues to invest, this is where you need to be with the Ferrari. All right. So why is there even a need for these types of investment vehicles? It's because there's $30 trillion out there in the world in retirement money that's just sitting there. It's just sitting in Wall Street, going the roller coaster. It lost a lot of money at the beginning of COVID, rode the roller coaster back all the way back, and it really rode the ebbs and flows, for the entirety of people's lives. $30 trillion is just sitting out there, not invested in alternative investments like real estate or gold or cryptocurrency. It's just there. It just exists with financial advisors, and it pays for custodians and financial advisors to go on lavish vacations and yachts and golf trips and all this kind of stuff. Meanwhile, while you're putting in those hard hours. So why have you never heard of the EQRP? The reason why you've never heard of the EQRP is because of this guy right here. Okay, this guy right here wants control, and he wants fees. Okay, the Wolf of Wall Street, which is your custodian or your financial advisor, they make money off of your money. Okay, and I want to be very clear about that. They have no incentive to tell you about a vehicle like the EQRP that gives you full control over your money. There's no incentive there, because they would not be getting their fees. They would not have any control over the investments, and ultimately they'd be giving you the keys to your own castle. And that is not something that they want to do, because they earn a lot of money off your money again. And these are fees that you don't really see. It's just kind of nickel and dime here and there, and they make a lot of money off of that. So that's why you've never heard of it. They have no financial incentive to tell you about that. So what is the EQRP? Okay. EQRP is a checkbook control, total control for your retirement money. You can have one person, or you can have a business. So other plans, if you want to hire an employee or something like that, you have to cease to exist. With the EQRP, you can have employees. There's no transaction fees. There's lawsuit protection. There's a $50,000 credit line, and there's unlimited debt or leverage to juice your returns. Now, if you were to use leverage, we'll talk about this in a little bit, with other types of retirement vehicles, you will get taxed. And we'll get to that here in just a second. But ultimately, the EQRP is a type of 401k in the 401k tax code that gives you full control over the investments that you make, whether that be real estate, global options. There's a lot of people that are doing coffee farms and teak wood. There's notes, promissory notes. There's hard money lending. There's gold. And most recently, a lot of our clients and investors are getting big into cryptocurrency and Bitcoin. Bitcoin was at $3,000 about 7 months ago. Now it's at 36, 37. It was over 40 at some point. So we've had a lot of clients make a lot of money off of Bitcoin. You're never going to be able to do that in your current situation. But with your EQRP, you can invest in Bitcoin immediately. So who is disqualified from having EQRP? So only certain people. So vertical line of succession. So kids and parents are disqualified from, you can't invest with your parents or invest with your kids. Those are disqualified people per the IRS. And then properties you use, you couldn't go buy a house with your EQRP and go stay in it, or as a vacation house. That's not an investment. That is that's a vacation house. That's a disqualified transaction. And then these very unique IRS collectibles that they listed here: rugs, cars, wine. And again, gold is not included here because gold is a currency, not an investment. So let's get to the most common question that we receive. Okay. The most common question we receive is, what the heck is the difference between a self-directed IRA and an EQRP? Okay. So first, the self-directed IRA lives in an IRA tax code, totally different tax code. EQRP is a retirement savings trust that lives in the 401k tax code. So two totally different tax codes, and we'll see the differences here. So with self-directed IRAs, you have to deal with custodians. And many of you who have custodians or financial advisors out there know that that is a slow process. You have to ask the permission in order to do certain investments. You have to ask the permission to fill out a form. You have to ask the permission to go to the bathroom sometimes. It is a slow process. The contribution limits are so much lower. $6,000 a year for an IRA, where it's $57,000, $58,000 a year with the EQRP. And the big kicker here is UBIT tax. Okay, I'll go over the EQRP real quick. EQRP is fast. There is no custodian. You are your own trustee. If you want to invest with a certain syndicator, or you want to invest in a certain deal and it's a qualified transaction, you just wire the money or write a check from your EQRP retirement account. You can unlimited debt and unlimited leverage without taxes, and your contributions can be up to $58,000 a year. Now, let's just go over a deal, and then I'll talk more about this UBIT tax deal that I just mentioned. Okay, let's just remember that in your mind, a UBIT tax. Okay, this is a deal that was done down in Texas. Okay, syndication. So $50 million purchase. Okay, so we put $10 million down, $40 million in debt. So about 20-80 split. Okay, so $20 million or 20% cash, 80% debt. 5 years later, after $5 million of cash flow, we sell it for $85 million. Remember, we purchased it for $50, and we got $5 million in cash flow, and we sell it for $85. Total profit is $40 million. Okay. If you were in a syndication and with your self-directed IRA and you invested $100,000, then 80% was used with leverage. Okay. So 80% of your profits was used leverage in the IRA tax code. That means $80,000 of this owes UBIT tax. It can be roughly 35%, all depending on the investment. It can be roughly 37% of the investment. That's $20,000 to $29,000 that you would owe out of what your investment earned, and that goes on that year's tax return. It's this right here on your tax return. Okay, it hits you like a bomb. And so UBIT tax stands for Unrelated Business Income Tax, and it's triggered by this thing in the IRA tax code called Unrelated Debt Financed Income. Okay, it could be up to 37% tax. Okay, so if we go back to that same deal, okay, the SDIRA would only receive $29 million. Those investors, the EQRP, would receive $40 million. IRA investors would pay up to $29,000 each in tax, and EQRP investors would pay zero. EQRP is exempt from UDFI triggered UBIT. Okay, let's look at another example. You're going to flip a house. Let's just say you're going to do it with an IRA. You buy the house for $150K, you put 50 into it with a rehab, and you sell it for $100K profit. After expenses, you get 58 net profit. Okay. That flip profit of 58K, okay, with the SDIRA, the UBIT tax of that around 35% is $20,000. It is detrimental, and it's money that you earned. I mean, think about flipping a house. If any of you have ever flipped a house, that's a lot of work that was done. And to just have $20,000 wiped out is just unnecessary and detrimental, and that's not financial freedom. If you converted that asset within before that thing sold, then you would get that $58,000 tax-free.
You're listening to the Investor Financing Podcast. We'll be right back after this break.
Hi, this is Vinny Chopra. I wanted to give this recommendation for my friend Beau Eckstein. I live in Danville in the Black Hawk area, and Beau has been a tremendous friend to me, not only as a friendship, but also as a loan broker. As a matter of fact, I had a chance last year to get opportunity to get a refinancing done on a loan. And he was able to get $8.5 million loan that closed in 15 days. 15 days. I know I've heard many other stories from my friends where Beau has helped them quite a bit to get the hard money loans and flipping and the construction loans and things like that. So that's tremendous. And I really believe, he's very straightforward. He gives the best terms that are possible, and then also walks you through the whole process. And those things are really, really important to anybody like me who does not know how to get, all the applications and things like that. So thanks, Beau. I really appreciate you, buddy.
Again, the EQRP is exempt from UDFI. And we'll talk about what I just said. So if you're already invested with a deal with a self-directed IRA, you're sitting there worried, oh my gosh, I made a huge mistake 3 years ago. In 2 years, when the property sells, I'm going to get hit with a massive UBIT tax bill. Yes, you will get hit with a massive UBIT tax bill if you leave that in a self-directed IRA. But the good news is the government allows you to do what's called an in-kind transfer. Okay. And so if the self-directed IRA is already invested, we can just move it from the self-directed IRA into the EQRP, and there is no UBIT tax. So just by doing an in-kind transfer, you're saving thousands and thousands of dollars. So who's qualified for an EQRP? I get asked that all the time. You have syndicators, real estate investors, self-employed people, online businesses. We have people that are Uber drivers, Etsy store owners, Amazon store owners, eBay store owners, investors who manage property, W-2ers. Having a job is just fine. And if you have employees, so there's really not that many limits to qualification. And then how do you fund the EQRP? Okay, there's two forms, rollovers and contributions. You can roll over from an IRA, a 401k, TSP, 403b, 457, and you can do unlimited amounts of these. So there's no limit in terms of how much you can roll over, money amount wise, or amount of rollovers. The other way is contributions. Okay, so with IRAs, there's an income limit to being able to do Roth. That is not the case with EQRP. You roll everything over into your EQRP, you can convert the whole thing to Roth. Or you can roll Roth money over, Roth 401k money over, and you have a Roth EQRP, and that grows without tax for the rest of its life. You can contribute up to $58K a year, and that's the traditional and Roth money, and there's no income limit. So the sky's the limit there. And I'll end with this. There's a study that was done by Wells Fargo, and I'm not going to say Wells Fargo is a huge competitor, but we feel that anybody who is trying to kind of hold your money hostage as a competitor. Okay, so Wells Fargo did this huge study. The number one concern for millennials and baby boomers is retirement. Okay, people are worried about retirement. And remember, I said earlier about how much money is just stuck out there in the stock market, just sitting in people's IRAs and 401ks. A lot of people are concerned that that's not going to be enough to support their family when they retire. It's a big deal. So if you'd like to know more, just want you to text the word EQRP to the number 72,000. If you text the word EQRP to 72,000, you'll get our special report, which is essentially the cliff notes of our book. It's the nuts and bolts of our book. And you'll be able to really see kind of the granular portions of the EQRP and how it can help you become financially free. If you have any questions, please don't hesitate to reach out to me at justin@eqrp.co. That's justin@eqrp.co. And I'm always here to serve you and answer any questions or concerns you may have. So I'll end the presentation there and answer any questions you may have, Beau.
Okay, great. Well, thank you. That was an awesome presentation. So, so when you're setting up the program, okay, so is there ongoing costs, or is it more of it gets set up and then what would be the yearly, costs associated with this retirement vehicle?
Yes, that's a great question. So a lot of people ask us, are you going to fee us to death like our custodian, or is there a monthly fee? Is there a transaction fee? Is there a rollover fee? We only have two fees. Okay. There's a setup cost, which is $3,995. You'll never pay that again. That's to establish everything, to architect the plan from scratch. We open up your EQRP bank account. We build your asset protection, and we keep everything in compliance, and we do all your rollovers for you. So that's a one-time fee. You'll never pay that again. And then our annual fee kicks in 365 days later, and that is $495. And that's for us to keep your plan in compliance, in state and federal legal compliance, to pay all your registered agent fees and other fees, et cetera. We fill out 5,500 forms for you. We file anything that's needed for you. We can create an LLC for you. Whatever you need, it's all encompassing. And that also includes unlimited strategy sessions. You have access to wholesale gold pricing. You have access to deals, syndications. It's really kind of unlimited, but those are our only two fees. And
Cool.
We waive that setup fee for spouses, Beau.
And so it really seems like a really amazing product. I think a lot of people just don't really, they come from kind of the employee mindset, so they don't know all these, options that are available for them. And what I really like about this is that you can leverage this without getting penalized in taxes, which a lot of the other programs you're going to pay taxes using leverage. So this is standard that you would have to get non-recourse debt, right? Everything ought to be non-recourse because it's not
Correct.
you signing for it. So people need to be aware that, but there's actually a lot of lenders out there, as I deal in the finance space, that actually make non-recourse financing available. So that's great. That's really interesting. And you can put away up to 58,000 a year, which is really cool. And can you set this up if you have like multiple businesses and have different, like one for my primary business and then have like there's a strategy behind having two potentially, one for my company and one for my independent investing business?
So yeah, you could set up more than one, but the limits are aggregate across, the 401k tax code. So you couldn't max out one and max out another. So the limits would be aggregate across.
Got it.
Yes, sir.
All right. And what other question that I didn't ask do you get often? People ask you this question all the time, so we can.
Yeah.
That we didn't cover.
Yeah. The most common question is, kind of what's the catch? What's the con? What's the not what's the pro, but what's the con? Like what's the negative here? And, what I tell people is the only negative, and it's not really a negative, but the only negative I tell people, and I turn some people away, is this is not for you if you're not self-responsible. We are literally giving you the keys to your castle, okay, and giving you the ability to go and invest. And if you choose to not invest it, the money's just going to sit there, and so you have to be self-responsible and kind of a go-getter and know, dive into the syndication world, find a syndicator you like and get an investment in there. A good syndication is going to double your money in 5 years. That's just a fact. And you just have to be self-responsible. And if you're not, then it's not for you, and that's okay. So, but like you said, a lot of people are stuck in the employee mindset, and it's our goal to get people out of that mindset.
What kind of reporting do I have to do? Let's say I have a Eqrp account, and that account bought some real estate, maybe flipped some properties, maybe made some loans that year. At the end of the year, what do I need to do? I deliver this information to you and you do the reporting, or is it something I report to my accountant, or how does that work?
Yeah, so great question. So you're responsible for your own ledger. It can be as simple as an Excel spreadsheet, or a QuickBooks spreadsheet. If there's fair market valuations that need to be done, we can help with that. And like I said, we fill out your 5500 form for you. But yeah, I mean, it's just a simple ledger that you just need to keep with your own records.
What's a 5500 form? What is that? Just a form that goes to the IRS, or?
No, so that's a lot of people are confused and thinking that's an IRS form. It's actually a Department of Labor form. And it's only required if you have more than 250K in your retirement funds. And it's just an assessment of what's all in there. And you just have to report it to the Department of Labor. Okay.
And can you kind of just briefly talk about fair market value? Is that something you do on any asset? Let's say in your account, in your QRP, you owned a condo, for example.
Yeah.
What at the end of the year, do I have to say what the fair market value of that asset is? Is that what it is, and that gets sent on, or?
Yeah. So fair market valuation would be seeing what the property is worth at that point in time. Okay. And your CPA can do that, and just report that on their normal tax filings.
Cool. So really, to kind of recap, it's an amazing vehicle. Most of the listeners here and viewers are real estate people, so obviously this is a great way to build up this account. So this would be a tax deferred account. Essentially, it's not you're paying tax at the end.
You can do both. You can have traditional and Roth, or all Roth. Yep.
Okay. It could be either. It could be set up either way. So it could be set up any way, really. Got it. So it could be pre-taxed or.
Yep. It could be pre-tax. Could be post-tax. It's very flexible.
So you could convert, hypothetically, if you had a Roth IRA, you could convert that into a Eqrp. Is that possible?
No. So the only type of funds, there's two types of funds that we cannot roll over to an Eqrp. Okay. Roth IRA and inherited IRA, and that's IRS law that once a Roth IRA, always a Roth IRA. Okay. So, but if it was Roth 401k or anything else, but anything traditional, so pre-tax that you roll over, you can convert to Roth inside of an Eqrp. And it's called an in-plan Roth conversion, and we have people that are bullish on it because we believe. And we are bullish on it because we believe that taxes right now are lower than what they're going to be in 30 years when we retire. So.
Yes, that's a good point. Wow, that's amazing. So there's a lot of different options. So basically, in the show notes, we're going to put all your contact information, Justin, so anybody listening or watching can reach out to you and you can answer all our questions in details. Because I know you probably get the same questions over and over again, but people want to
absolutely
figure out.
Reach out to me anytime.
Their game plan. All right, everybody. Well, thank you for watching, and we'll see you on the next episode of the Investor Financing Podcast.
Thanks for listening to the Investor Financing Podcast. For show notes and useful resources, please visit investorfinancingpodcast.com. For questions or comments, email info@investorfinancingpodcast.com. If you enjoy our show, please share it with your network. Until next time.